Hey folks, it's Kevin. In this video, we're going to be discussing VA home loans, who they're offered to, what the benefits and requirements are, and how you can go about applying for one. The VA home loan is offered to active and former military. And according to VA guidelines, that means that you would have had to serve a minimum of 6 months in order to open up that VA entitlement. If you are in the Coast Guard or a reservist, you would have had to serve a minimum of 6 years in order to receive your entitlement. Personally, I think that the VA home loan is the best loan that you can apply for when purchasing a home. The benefit that you hear the most about is not having a down payment requirement when purchasing a home, which is huge because if you were to use an FHA loan or a conventional loan, you'd have a minimum down payment requirement of anywhere from 3 to 5%. In addition to that though, you also get to avoid paying into mortgage insurance, which on those other types of loans we talked about earlier, you would have had to put 20% down in order to avoid that. And that can be a huge saving on the monthly payment. Lastly, what you'll find is that interest rates on a VA home loan are typically lower than a standard conventional loan, which further reduces that monthly payment. There are some things that you'll want to know prior to applying for a VA home loan. Although there is no down payment requirement, you are responsible for paying for your own closing costs. Closing costs are typically about 2 to 3% of the purchase price of the home, and they go towards paying prepaid taxes and insurance 6 months in advance, escrow, title fees, and a ton of other fees that I'll actually link a video up above so that way you guys can watch that if you want a more detailed breakdown of what types of fees are included in your closing costs. But just understand that that is money that you are going to have to bring to the table prior to closing on your home purchase. The minimum credit requirement for a VA home loan is 620 FICO score. In regards to the debt to income ratio, underwriters are going to use a different formula than they would on an FHA or conventional loan. What they're going to do is they're going to look at your residual income, which basically means that they're going to look at how much money is left over after all of your major expenses are paid at the end of the month. And this percentage will vary dependent on the loan amount of the home, the area in which you're purchasing, and your total family size. If you're interested in applying for a VA home loan, I recommend reaching out to a local loan officer in your area. Most, if not all, loan officers can originate these types of loans, so it's not like you have to go directly to the department of the VA in order to apply for one. If you have any questions, please feel free to drop a comment down below, and you'd be greatly supporting my channel by tapping the like button and also subscribing if you haven't already. Thank you so much for watching, and I will see you in the next one.